Yeah, look, it was very interesting comments. And I guess, firstly, inflation expectations can become a self-fulfilling prophecy. So if households and business expect higher inflation in the future, they will get higher inflation in the future. If households and businesses expect lower inflation in the future, they will get lower inflation in the future. So it was really important that Powell addressed this in his speech. And I think that the narrative he told was, look, he's going to do whatever it takes. He's going to put up rates and he's happy to keep them there for a prolonged period of time, which really means that he's targeting the lesser of the two evils. I guess on the one hand, he targets inflation, he slows down the economy, potentially pushes it into a recession, obviously not good. But the alternative is he allows the economy to keep heating up and inflation expectations to keep rising. And I guess we know that impacts the most vulnerable in society. So because they're spending the majority of their weekly pay packet on consumables. So look, he's doing the right thing. What it means, I guess, is what it means for equity markets and debt markets, probably two different things. We noticed that, yes, the 10-year bond jumped on the speech, but the debt markets are really just saying, yep, no, understand that, see where you're going. The equity market was a lot more volatile, and you saw a large sell-off, which says to me that parts of the equity market were expecting the Fed to pivot in early 2023. I think that's definitely off the table now. But we, as long-term investors, I guess the most important thing is what's the 10-year bond rate, and it's round about 3% plus a bit or minus a bit. So for long-term investors, that's still a very low 10-year bond rate, and we would use this kind of sell-off we're seeing today as an opportunity to increase positions that we believe will do well over the long term.
Lachlan, of course, we saw the most pronounced reaction in equity markets in the US market. Powell talking about the potential that's going to go and cause economic pain both for households and businesses, and that would probably go and infer also earnings as well. After that speech, has it made you go and rethink where you want to be allocating your portfolio at the moment? Is it going to still be pretty top heavy towards the United States market?
Yeah, so what we're looking at for us at Swell, we're really focused on the long term. So in terms of our long-term expectations for our companies, that hasn't changed. So what we really do is try and find companies that have been sold off as part of this. If we look at our portfolio, the last change we made to the portfolio was back in May when we increased our weighting to Amazon. And I guess the reason we're investing in Amazon today is because we see a very long runway of opportunity in e-commerce. E-commerce is around 20% of total retail in the US, and we think over the next decade it gets over 30%. So that is going to so overwhelm any other decision we make. So we really say, look, as long as Amazon's a great business, which it is, and I guess the secular shift towards e-commerce is still in play, then we're going to increase our weighting to that company. And we just use these opportunities to really fine-tune the portfolio. But the last change we made to our portfolio was back in May, where we increased our position in Amazon. But we also increased our position in another e-commerce name, which was Shopify. And I guess there's two things going on there. There's definitely a cyclical component, and the cyclical component says, look, discretionary spend is going to be down in the next 6 to 12 months. But that's, well, I guess we're saying, yes, we accept that's the case, as long as the secular trend, which is the shift from physical retail to online retail, is still in play, and it very much is. And this is driven by a bunch of factors, convenience being one of them. I think Amazon has just taken 15 million items now available next day, 100 million items available on 2-day delivery. So these things which improve convenience makes it a better product for people using the Amazon service, and we really want to use these opportunities to increase the weightings to these wonderful businesses.